Great, today we're going to talk about the technical and fundamental indicators combined. So we're going to combine the best of these two worlds. Why are we doing this? Well, just simply because it's the best way to be successful in the Forex market. Okay, when we combine the technicals with the fundamentals, our chances to make money increase drastically, and that is why we're doing this for you. Okay, please feel free to visit us at www.onedailytrade.com. All right, technical and fundamental analysis. Let's talk about the technical indicators first of all. Past performance is not a guarantee of future results, but used in the correct way can give an indication of where investors should be focused for the best results. Okay, fundamental indicators is an interpretation of statistical reports and economic indicators. Things like changes in interest rates, employment reports, inflation data, monetary and fiscal policy reports all fall into the realm of fundamental analysis. Okay, going back to the technical indicators, there's an old market adage that says past performance is not a guarantee of future results, but used in the correct way, past performance historical trend analysis can give an indication of where our investment should be focused for the best results, as we said before. That is important to keep that in that is important, so keep that in mind. Okay, we're going to mix the technical with the fundamentals so we can obtain at least 90% guarantee of what we're doing when we trade. Okay, when we talk about technical indicators, there are a lot of technical indicators available to you. All right, most of the indicators tend to follow the moving averages and then some formulas to make a difference between one and another. However, the one that we tend to use the most, because it's the most reliable one, if we can speak of a technical indicator, definitely that is the Fibonacci. When we talk about the Fibonacci analysis is an exercise in identifying levels of support and resistance during both trend retracements and trend continuations. Okay, this is based on a series of numbers and ratios derived from the Fibonacci sequence. This sequence was discovered by the Italian mathematician Leonardo Pisano, or Fibonacci. The Fibonacci sequence starts with 0, 1, and 1 and is calculated by adding the two most recent numbers in sequence to arrive at the next number in the sequence. Just to make it simple, if you take the first two numbers in the sequence, you get 0 plus 1 equal 1. If you then take the two most recent numbers in the sequence, you get 1 plus 1 equal 2. Repeating the process, you will get 1 plus 2 equal 3, and so on and so forth. As you continue on with this process, the sequence begins to take shape and ends up looking like 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, and so on and so forth. Okay, that is pretty much the concept behind the Fibonacci. But why are we talking about the Fibonacci? Well, while the sequence alone is a fascinating discovery, the relationships between the numbers in the sequence are what we as investors are really interested in. Okay, there are two ratios in particularly. Those are called the golden ratios. All right, the two most important ratios found with this sequence from an investor's point of view are 38.2% and 61.8%. These two ratios appear over and over again, not just in the market, but in nature, such as in the concentric rings of sunflowers, conch shells, and pine cones. Okay, so that is important because this will appear on the market as well. That is fascinating. All right, so that's what Fibonacci is. We'll show you how the Fibonacci works and what we're looking for with this specific indicator. All right, let's move on to the Fibonacci graph pretty much. Okay, so we have an MT4 platform. That's the most common one in Forex. We have the US dollar and the Japanese yen right there. All right, this is a daily chart. all right, starting in January 2013 all the way to June 17. All right, so what we're doing in here is these candlesticks represent 1 day, and using the Fibonacci, pretty much what we're doing is we use the Fibonacci retracement. Okay, we started from the bottom low point all the way to a high point. Once we do this, the Fibonacci retracement will be generated actually. All right, when we talk about support resistance, okay, the levels of support resistance, the level at the bottom should be the support or the floor, and the level at the top, it's called the resistance or the ceiling. All right, what we're trying to accomplish with this, first of all, the investors or traders, we tend to focus more on these two ratios right here, the 38.2 and 61.8, as I mentioned it before. However, that doesn't mean that I'm not going to pay attention to the other levels. Those are really important. All right, we'll come back to this point in a moment, but all I want you to know right now is that this is really important when you're trading. All right, I'll show you why. We're mixing the best of two worlds. All right, let's move to the next slide. So now we're going to focus on the fundamental analysis. At the end, we'll combine it and make a trade. Fundamental analysis. Last time we spoke about supply and demand. With this diagram, and I explained, and I'm going to explain again, what we're trying to accomplish is just to see the tendency of the currency, if it tends to move up or it tends to move down based on this economic tool. All right, so on the vertical axis we have the price, and on the horizontal axis we have the quantity. All right, this dotted line is the demand and the black line is the supply. What we said before was that when the demand for a currency, in this case, increases, moving from this dotted line to this pink line right here, what we're saying is when the quantity increases, as we can see it, the prices tend to move up, as we can see in here, moving from P to this price right there, P, as we can call it P1. All right, that's the first thing. The second thing, and it's the opposite, when the supply of a particular currency increases, the opposite happens. Okay, when the supply increases, the quantity in this case increases, what happens to the prices? The prices tend to move down. All right, so it's the opposite. Demand increases, prices increases. Supply increases, prices decreases. All right, we'll make it all together so you will understand what is happening. All right, so based on these two, the technical indicator and the fundamental indicators, as we call it, we are going to talk about Japan, and we make a trade based on this knowledge. Okay, so Japan, let's talk a little bit about Japan. Japan is a net exporter country. What we're saying when a country is a net exporter, they tend to export more than what they import. Okay, the economy of Japan is the third largest in the world by nominal GDP. All right, so it's very big country. Okay, if we talk about GDP, Japan is the world's third largest automobile manufacturing country as well. Probably you're familiar with Honda, Toyota. All of these cars are made in Japan. Okay, so if the currency, and this is something really important that you guys need to know, when a country is a net exporter, what they want with their currency is to devalue or pretty much keep it lower, specifically to the ones that they try to export. Okay, so Japan, they don't want a strong currency, they want a weak currency so they can be very competitive in the world. Okay, because they are not the only ones that are manufacturing the cars, there are other countries too. So the cheaper that they can produce the cars, the better, the more competitive that they can become in the world. Okay, so that's what they want. They want a cheap currency, really the value currency. All right, because they are net exporter, they want to be very competitive by prices. Okay, so that's something that we need to keep in mind. This is pretty much what's going on right now with the exports. The more that they export, the better it is for the country. All right, so now let's talk about their main export partners. We have China and then the United States and Russia. United States by itself accounts for about 17%. All right, that's huge. That's huge. So when they're trading with the United States, what they want to do is they want to have a currency lower than the United States, or in this case lower than the US dollar. All right, keep that in mind because that will be important when we do our trading. All right, so let's move on to the next slide. All right, as we see actually this year what happened to the Japanese yen, it's been devaluing pretty much since last year, August 2012. From August 2012 all the way to April, the third week of April, the currency devalued about 17% in relation to the US dollars. All right. So what's going on in Japan? Why they devalue that much? One of the things that we talk, they're an exporter, so they want the currency to be really weak. All right, Abenomics, that's another thing that it's important to realize, because Abenomics based on what the government in Japan wants to do. In this case, Prime Minister Shinzo Abe, that's why they call Abenomics, has taken the center stage in the world of finance, elected on a platform of aggressive action designed to spur growth and end deflation. All right, so what the government in Japan is trying to do right now, they've been starting this in April. They want to target a 2% inflation. Okay, they want to correct the excessive strength of the yen, as we can see it, and also they want to start set a negative interest rates. All right, that's they want to do. Right, that was made on April 4th this year. All right, so the announcement again as an explicit target for the base money stocks. This year, this year is 200 trillion yens. By the end of 2014, they will reduce to 200. Actually, they will increase to 270 trillion yens. That's huge comparing to the United States. All right, so that's so important to know. So we need to know what's going on in the world to make our trades better, so we can be more confident when we do this. Right? Currency value. This is the same graph, but what happened based on what they were trying to do, what they're trying to accomplish. In this case, they're trying to pump money in the market. Remember what we said about the supply and demand. When they tend to increase, in this case the government tend to increase the supply by pumping money, by buying buying stocks, 200 trillion, 270 trillion. They're pumping money in the market. By doing this, they increase in the supply. When they increase the supply, what happened to the price? The price will tend to move lower and lower, and this is exactly what we see in this slide. 17% depreciation since August 2012 all the way to April. Okay, so that's the first thing that we need to know. Once they pumping money, the monetary policy, or the government in Japan in this case, is pumping money, we know that the currency will devalue. All right, and that will be our first bias. We'll buy it, we'll not sell it. All right, now it's not going to happen all the time. Currencies will move up and move down, but the tendency is what we're looking for. In this case, an uptrend. All right, and right now it seems like it touched resistance, and that is why we're using the Fibonacci retracement. All right, the support resistance. Right now we're in the resistance, touch it, retrace a little bit. It might come all the way to this level of resistance, support, and then bounce back. So what we're doing is just gonna wait for this currency to touch this line or get close to this line, and then we'll buy it again. All right, so we're talking about $500, $5,000, $50,000 with this movement. All right, it depends how much money you have in your account, but this can be very profitable when you understand what's going on the world of currencies, when you understand what the news are telling you. All right, and that's what we're here for, to help you. All right, so please feel free to contact us either by going to the website www.onedailytrade.com or calling us 801-413-4291, 801-979-4811. What we're trying to do is pretty much combine the best of two worlds so we can be very profitable when we do this. We're very confident because it works, and it works perfectly. Right? We can teach you this, plus many other things that we have. All right, so feel free to contact us, and you guys have a wonderful day. Bye.